Good evening. Anything that we discuss is going to be for educational purposes. I'd like to welcome you all to Digital Trading Floor. It's a platform where we disseminate financial data in real time to provide actionable insights using live streaming technologies. So follow along as I navigate the markets by trading in my own account, and hopefully you will learn how I analyze the data in real time to make trading decisions. The purpose for making this video is to analyze Nifty options open interest data. We would be analyzing Nifty on multiple time frames, and we would be framing a view for Monday, that is 31st May. Apart from the index, we would also be discussing our stock watch list for Monday. So let's start by analyzing options open interest data. The max pain level for 3rd June weekly expiry contract is currently at 15,400 levels. So if market was to expire at 15,400 on 3rd June, in that scenario, call and put option buyers, they will suffer huge losses, as on expiry large percentage of options they expire worthless, and option writers at 15,400 strike would make profits if market was to expire at the max pain level on 3rd June. If we analyze the overall open interest data, you will see that highest amount of calls have been written at 15,500 strike, followed by 15,600 strike, and highest amount of puts have been written at 15,300 strike, followed by 15,000 strike. And based on this data, we get a broad range of 200 points for the index, between 15,300 to the downside and 15,500 to the upside. And if you were to see what happened intraday on Friday, the change in open interest data suggests that highest amount of puts were written at 15,400 strike, and followed by 15,300 strike. And you can also see highest amount of calls, they were written at 15,500 strike, followed by 15,600 strike. And you will also observe that we saw open interest reduce in 15,200 call strike, 15,300, as well as 15,350 call strike. So this tells us that call option buyers, they book their profits as these strikes they became in the money, and call option writers, they book their losses because these strikes become in the money. And I'll repeat once again that for Monday, we would be trading in a broad range of 200 points between 15,300 to 15,500 based on the overall open interest data. If we analyze the index on multiple time frames, you will see that on the monthly time frame we are trading above the opening print 14,481 level. So on the monthly time frame, market is under control of buyers. And if we see the weekly time frame, you will see that a market is under control of buyers as it was trading above 15,211, and you would see that on both monthly and weekly time frame, we are trading above the opening prices, which means that market is under control of buyers on all the time frames. And if we see the daily time frame, today was again a volatile choppy day, so we managed to close above the daily open, which was at 15,421. And so here you can see that on all the time frame, market is trading above the opening price. And I would also like to reiterate that on Monday, two new time frames will open: a new weekly time frame as well as a new daily time frame. And if you see the price structure, you will notice that we have been making higher highs, higher lows, higher highs, higher lows, again higher highs and higher lows. So in terms of price structure, we are also making an uptrend, apart from being under control of buyers on all the time frames. See over here, prices above monthly open, weekly open. So both the large time frames are under control of buyers, and which we can confirm through this uptrending structure. So based on this, we get the following scenario for Monday: above 15,435 levels, we can trade towards 15,469. 15,489 levels and potentially 15,515 levels. And below 15,394, we can trade towards 15,374, 15,348, and potentially 15,319 levels. And the neutral price range for Monday will be 15,435 to 15,394, in which one can refrain from making any trades. If we analyze our stock watch list for Monday, the stocks that we have chosen are all inside candles on the daily time frame. So here you will see our first stock is DLF. On Friday, it was an inside candlestick as well as on Thursday. So this was we were tracking this for breakout on Friday for either side of the range. However, we didn't get any trade as it formed another inside candle. So if here you can see that in terms of price structure, we have plotted 5-day exponential moving average. So market is trading above 5-day exponential moving average in DLF, and will look for buying opportunity above 288.7 levels with our normal size, and below 283.4 we will look for selling opportunity with half our normal size. Second stock is Infosys. You will see again it's in an uptrend, and it is trading above its 5-day exponential moving average. So we'll look for buying opportunity above 1414.1 levels with normal size, and we'll look for selling opportunity below 1396 levels with half our normal size. Our third stock is Manappuram. You will see that Manappuram has formed an inside candlestick, and it is trading below its 5-day exponential moving average. But in terms of the trend based on moving averages, it's still in an uptrend. So here we would be trading either side of the range with half our normal size. Above 157, we look for buying opportunity with half our normal size, and below 154, we look for selling opportunity again with half our normal size. So the longer term moving average is 20-day exponential moving average. So we currently have a 5 bullish crossover on 5 and 20-day exponential moving averages. So in terms of trend, we are definitely in an uptrend in Manappuram. However, the short-term momentum market is trading below its 5-day exponential moving average. So uh, because of this conflict, we would be trading Manappuram with half our normal size. Final stock for Monday is going to be Wipro. It's again in an uptrend. So we'll look for buying opportunity above 540.4 level with our normal position size, and we'll look for selling opportunity below 532.55 with half our normal size. So all these stocks, they have formed inside candles on the daily time frame, and inside candles are formed when there is an equilibrium between both the buyers and the sellers. And I'll also like to inform you that I would be posting in our blog post our long and short biased watch list as well for Monday. And in those stocks, we would either be trading to the long side or will not be trading to the we'll be trading either long or short side, else we'll not be making any trades in those stocks, and we would definitely be having a bias in those stocks. Whereas in these four stocks, we don't have any bias. We look for opportunities in both the directions, and our bias long short watch list will comprise of sectors which have been outperforming the index. So to the upside, IT stocks, media stocks, as well as PSU banks are outperforming, and metal stocks, they have been underperforming the index. Finally, before ending this video, I like to summarize that on Monday above 15,435, we can potentially trade towards 15,515 levels, and below 15,394, we can potentially trade towards 15,319 levels. and we are in a broad 200 point range between 15,500 to 15,300 based on the overall open interest data, and the max pain level for uh, 3rd June weekly expiry contract is at 15,400 level. And our neutral stock watch list comprises of DLF, Wipro, Manappuram, and Infosys. So these stocks, they have formed an inside candle and will look to enter a position in these stocks if either side of Friday's high-low range breaks. And I would repeat again that I would also be posting a long short biased watch list in a blog, so stay tuned for that as well. And finally, I'd like to thank you all for watching this video. Do hit the like button, share this video, and subscribe to Digital Trading Flow YouTube channel. Thank you.